William Ma, a CIO at Grow Investment Group, joins us with his take on things. William, good to have you in the show. Thank you very much for your time. What do you think does China need to do to break out of this 2-year plus bear market?
Well, I think there is a push factor and pull factor, right? So I believe a lot of we expect would be push factor, if you like. There are two big things, from a global and local investor perspective watching. One is the September rate cut. Second is the election, in November, if you like. I think from a fundamental basis, we are seeing some green shoots, domestically that potentially can trigger some of the animal spirit, if not the entrepreneurship. In particular, the younger generation consumption. You touch a bit about the game Wukong, a big success. I think those are little green shoots here and there that create still, positive catalysts. But again, I think the big turnaround situation, people are waiting for the first big, rate cut as well as, the election before the big rotation from DM to EM, happen again.
That indeed would be the case. I wonder how that plays into some of the Chinese tech names, which have been so oversold. It's not like growth is not there for the likes of Alibaba and Tencent. It's just that people don't want to buy it at these levels because of regulatory uncertainty.
Yes, I think there is no doubt that, cheap valuation is no longer an issue, if you like. And in particular for Alibaba, we are seeing, because I was in Middle East, last week, I'm seeing some of the sovereign wealth fund there actually adding, some of the exposure. And I asked them, why they are one of the, first batch of investors that I talked to is adding to the Hong Kong stocks and, Ali. And I think their answer is they are seeing the restructuring, they are seeing a little bit more friendly regulations, for example, like Tencent, the gaming. So I think those are sort of, catalysts. But in terms of, the longer flow, on the tech names, I think is highly correlated to the global sentiments towards China. And I believe it's quite hard to happen, before the first rate cut, as long as the election. The second point is we are expecting a divergence of the tech names. For the tech names who are focusing on the gaming, maybe, the younger generation will have a higher growth that will have a, higher kind of like potential interest from the global investors.
William, it's Sam here. I see you're increasing your China A-share exposure. Where? Because many seem to be playing the SOE theme right now as a sort of defensive play.
Yes, I think the rotation between SOE and high dividend will start because of the rate cycle change, if you like. And the most crowded name, from our perspective, is the so-called, dividend yield play, in the telecom or in the banks. I think we don't disagree with that. But at the same time, we are seeing some smart money or more potential interest is in names, for example, like Maotai. At the peak, they are trading at 70 times price to earnings ratio. But now it's going down to 30, not cheap, but at the same time, this is also kind of like market rebound play. And on top, we are talking about 4% dividend yield, for Maotai. So I think for the dividend yield play, that would be a good rotation. The second point on the China market, we are interesting to see is AI theme downgrade or AI theme, middle, kind of like sector. For example, the AI company in China who focus on the PC or hardware, that would be interesting. Last but not least would be the young generation consumption, names like, Bilibili would have a more, interested theme from our perspective.